What's going on, guys? Crypto Renegade here for you. In today's video, I'm going to be talking about how to spot crypto fakeouts so you don't get trapped in price and end up losing a lot of money. Yes, that actually is half a mannequin. Yes, I'm in some sort of weird closet, but the good news is I do have a new microphone. So let's jump right in defining what this is, how to avoid it, and I'm going to give you 5 examples of coins that are actually doing this right now. Stay tuned. All right, guys, welcome back. So before I jump into the content real quick, just want to give a quick shout out here to my website, Cryptorenegade.live. You can go ahead and check out my brand new podcast here on the Apple Store or iTunes Store or whatever you want to call it. It also comes free in conjunction with my case study that I'm doing, turning $100 into $1,000 trading crypto. Come to Cryptorenegade.live, link in the description if you're interested, and let's get into it. So first, in order to figure out what's going on in the crypto markets right now with fakeouts that are going on, I'm going to give you 5 different examples. But let's first define real quick what a breakout or a fakeout is. So it says here, a fakeout is a false breakout that occurs when the price moves outside of a chart pattern but then moves right back inside. A fakeout is also known as a false breakout or a failed break. I will also add it's called a FOBO, fakeout, breakout. So it has an illustration here where it looks like it's consolidating and about to break out of a trend line. It says when price finally breaks out of a chart pattern, which is basically a support or resistance level, whether it's horizontal or diagonal, one would expect the price to keep moving in the same direction as the break. So in this case here, it looks like it was going to have continuation to the upside, but it came right back into this wedges formation all the way back in. So why am I talking about this right now? Because there's 5 major cryptocurrencies that this is happening with right now, and I want to show you exactly how I spotted them and how you can spot them to better help you avoid getting trapped and buying these breakouts or buying these price moves only to lose 10, 20, 30, and sometimes even 40% by actually buying at the wrong time. So let me show you 5 classic examples starting with Bitcoin. Okay, so we have a lot to unpack here with this chart on Bitcoin. First thing I want to show you down here is the volume indicator. No matter what's going on with Bitcoin's price right now, there's a lot of money changing hands. So just keep in mind that there's a lot of selling and there's a lot of buying going on since 2022 began. Now this line right here shows since we've been in this consolidation range between 30,000 Bitcoin and all-time high of roughly 70,000 Bitcoin, it's been over 464 days. So that's essentially a year and a half of consolidation between this massive price swing. It's like the biggest consolidation chart pattern I've ever seen in terms of cryptocurrency, that is. So this is actually a huge consolidation range. Just kind of keep that in mind as we go through this. Again, 30,000 is the basic support level. 70,000 or 69,000 is the resistance level. Now, we are 43% currently off of the all-time high, but what's really important here is since the beginning of 2022, it bottomed out and it started forming an ascending wedge, which if you're familiar with any technical analysis is a inherently bullish pattern. This is where it continues to make higher highs and higher lows before it breaks out of a resistance area. In this case, the resistance area is 45,000, which you may have heard a lot of people talk about as a major local resistance area, not all-time high, but local of 45,000, and then it's slowly making higher highs and higher lows. And what happened here is it started consolidating, and a few weeks ago, it broke out. So everyone thought that this was the reversal, that we were going to see it hit 50K, 55K, 60K, all the way, grinding all the way back up to the all-time high. But as you can see here with this circle, it did what's called a fake out, which we just talked about. It just popped through, consolidated for a little bit, and then went right back into this range. Until today, it actually went all the way down and broke or invalidated this ascending wedge. So what's going on right now is it's trying to really get its way back in there. There potentially is a fake out on both sides, but this looks like it's sort of floating in midair. It could go all the way down to 30K. It could come back up into this ascending wedge or triangle and continue to consolidate and break up above 45K with conviction this time. We really don't know because this whole thing is mid-range between the bottom of 30K and the top of 70K. We really don't know what's going to happen, but based on the technical analysis and based on the chart that's going on here, this is a classic fake out breakout, or a FOBO as I call it. So in the current market environment that we are, where record high inflation came out today, there's wars that are going on, there's just a lot of turmoil, we'll call it, in all the markets, whether it be stock market or crypto markets or commodity market, it doesn't really matter. This is trailing the NASDAQ and has been correlated with the stock market for some time now. I wish it was decorrelated, but currently they're running in parallel at the moment. So just kind of keep that in mind. As we go through this, unless this shoots back up with volume into this range, we could be sort of either consolidating sideways or going all the way back down to 30K. There's really no way to tell until we get time. But the one interesting thing down here is that volume over the past several, we'll call it weeks, 6 to 8 weeks, has been massive. Last time we saw that kind of volume was selling pressure all the way back in June of last year. So just want to put this into perspective that when you zoom out, this is what it looks like all shrunken down. It's just a big consolidation area and we're about midway through. So there's no clear direction that the market is taking us. I just wanted to point that out, that in this local area on Bitcoin is a fake out. And the reason I started with Bitcoin is because every other altcoin does tend to follow or trail Bitcoin in this particular regard. So there's 4 other altcoins that I'm going to show you a very similar pattern to what we're taking a look at here, so that you can spot it and that you can learn to see, hey, maybe I don't catch the breakout just as it's breaking out of resistance, whether it's been consolidating for a week or a month or even a year. You want to be careful depending on what's going on in the market environment, but that's a classic example of a fake out breakout. Moving on. All right, so we have Ethereum, coin number 2 on CoinMarketCap here. So I kind of framed this in a couple of different ways. So all the way since the beginning of 2021, we sort of have like a ascending trend line here. Let's forget about those 2 wicks that happen right there. But for all intents and purposes, this has been making higher highs and higher lows all the way since the end of 2021. It is currently about 38% off of the all-time high, but again, this was sort of forming an ascending wedge pattern here around the 3,300 part, and as you can see in the circle, it did have a fake out. Now, what's interesting about this one is it has a fake out on both ends. It has a fake out on the horizontal resistance that we had around 3,200, and we also had a fake out breaking the descending trend line here, and that's sort of a pivot point where it got rejected. So it broke out of the initial local resistance, got rejected on the larger descending trend line, and now it went all the way back into this range where it's trying to hold support right now at $3,000, which is around emotional price. So this is another example of a double FOBO, as I call it. And again, I'm not going to be trading as far as trade setups go in the medium to short term until I get a clear conviction of what's going on with Ethereum. And can it hold this 3K, or is it going to drop down into this lower range around $2,600, $2,700? We really don't know, but when you zoom out and you kind of take a look, there's still sort of a range that it's coiling up in here, and you really want to be sure that when you're actually going through and trying to buy this on a breakout for new all-time highs, you want to make sure that it's breaking out of both of these ranges. But right now, a lot of selling pressure. It's holding 3K, but there's still a lot of coiling up that this can do. This is another example of not only a rejection, but a FOBO. So let's move on to the third coin. Okay, so this is Solana, another large cap coin. I'm sure you've probably heard of it. I structured down here a support level of, we'll call it roughly $80. I'm not going to use exact numbers. I'm just going to kind of use a round number, which is why I used a range versus using exact pivot points. So major support for multi-year all the way at $80. We had local resistance at around $120. Down here, once it hit the $80, it started to have a mini rally here. It broke out. And again, this is same as what's happening with Ethereum right now. It faked out, and then it got rejected on the descending trend line. Now, this is forming this overall huge pattern when you zoom out, is forming a descending wedge, which is inherently bearish. So it doesn't necessarily surprise me that it got rejected on this descending trend line. But the fake out here, there's a lot of people that went in after it broke this resistance of 120, thinking that we were going to go retest the all-time high. But as you can see, you have to understand basic technical analysis to see not only that, but mixed with the current market environment, what's going on. And it got not only rejected from the descending trend line and this local resistance, it's kind of going back. And even though it had a little pop because of the Robinhood announcement news where it got listed, it still has major structural support. So until it decides to break out of this range here, until either it breaks down or it breaks above with conviction, then there's really no trade setup here. But you do want to understand that this example of a double FOBO or fake out breakout. So this is how you spot it. You always want to structure the descending trend line in the overall trend, structure support, and then see if it's forming ascending wedges, descending wedges, and you could frame it horizontally or vertically or whatever. Just try to make sense of what's going on. But as you can see here, this is a very clear break and then fake, or some people call it a tweezer top. There's two more I want to show you on this. Okay, so we're looking at Avalanche now. So Avalanche, again, just to put this into perspective, is 48% off of the all-time high. It's, again, doing a lot of the same of what looks very similar to Bitcoin here, where at the beginning of 2022, it created a bottom. We'll call it roughly $50. This is major support for several months. And then it's continuing making higher highs and higher lows. It's just sort of coiling up or consolidating in this range. But when we got here back in the beginning of April, it looks like it was breaking out of that $100 range. But again, as you can see in the circle, it had a few wicks. It was really trying to break through, and then it got faked out, and then all the way down to the bottom of this range. So it's at $76 now. It's barely holding on to this support level that is diagonal. But again, this is another classic example, as we just saw, of a fake out breakout. And again, you just want to understand, and come back and watch this video as many times as you need, but understanding how to frame horizontal and diagonal resistance, basic patterns like bull flags, bull pennants, ascending wedges, descending wedges, what they mean. If you can get a basic analysis of what this stuff is, and also comment down below if you want me to do a video on basic TA, so you at least have some structure or some form of how to frame the market. Let me know down below. But if not, this is a perfect example of, again, another market fake out breakout. So you don't want to get trapped up here. You want to make sure that it continues to consolidate above a resistance level before it makes another leg up, before you invest, because the people that bought here are going to be really pissed that they didn't wait a few more days, see that they're going to lose a lot of money down here. Just keep that in mind. We have one more coin. All right, so this is Luna. Had a lot of hype lately, a lot of things going on with the UST ecosystem, Bitcoin backing, and a lot of fundamental good news what's going on here. So there's a few things I kind of want to frame here. Number one, we have between, we'll call it the $45 to $50 range, where there's basic support here. It kind of had a double bottom and then shot back up. And then it had a resistance break of, we'll call it roughly $100 to $105. So as you can see here, it did finally have a two test where it tried to break out, consolidated some more, and then it had a solid breakout above $105 a few weeks later. But as you can see, it totally trapped. It came up here all the way to 120. It's now 30% off of the all-time high, even more. And this just completely sold off, and it broke this sort of support level here of, we'll call it around $86 to $87, and right now it's sitting below that. So it's kind of sitting in open air trying to maintain that level. But this is, again, another example where it looks like the market's going in our favor. This is going to be the beginning of altcoin season. Everyone's going to get rich, but the people that bought up here weren't paying attention to volume. They weren't paying attention to the overall market sentiment. In this type of environment, when it's not clearly alt season, you want to be very careful about buying breakouts or have very tight stops in place so that you can catch, 10-15% of this, but have cutoffs to make sure that if it comes back to retest the support area, that it doesn't completely snap. And as you can see, these are very large red sell-off candles, and so it's sort of cascading down because there's no clear frame other than basic all-time high resistance that it broke out. It faked right here, and now it's coming back. It could come all the way back down to this major support level, or it could rebound at any point. There's really no way to tell other than this is the fifth total example of a fake out breakout. Hope this was helpful, giving you some examples, giving you some demonstrations of fake out breakouts. Why I'm a little bit hesitant in this current market environment to buy a breakout is because there's a lot of other factors that are going on that make it different than a previous alt season back in 2021. And a lot of different things that are going on in play. Money printing is stopped, inflation's up, wars going on, just to name a few. So those are other external factors that we haven't really encountered in the past coming to us all at once. So hope this was helpful. Let me know if you have any questions, comments, or below. And if you want a full-on case study tutorial of me trading $100 into $1,000 in crypto, from baseline every trade that I'm doing, and to join the Discord group, go to Cryptorenegade.live, sign up for the podcast, and get the free case study along with it. I'm going to go ahead and wrap this up here. Crypto Renegade out.